So here we go, philosophy of Islamic finance and ethics, which are practiced in, in the area of finance. And before I talk something about this, I would like to tell you that there are, in the area of business, we have a rule book, which would be very interesting if you want to read. We call it Sharia standards. And, Sharia standards. And this book is available free for download. I give you the link now. I give you the link, and this book is available in the, actually why I recommend you this book. There are so many books, but why I chosen this book, there is a, you can say in a way, majma al-fiqh, in a way you can call it majma al-fiqh, because more than one, multiple people are there, and they have made a Sharia board. So in this book, you will find the issues relating to foreign currency, the issues relating to sales and purchase, the issues related to, partnership, the issues related to investment in stocks and bonds, the issues related to insurance. So multiple things are there. And they have issued about 55 Sharia standards. So each standard discuss a particular topic. So I would recommend you that you download this book and you read whenever you have time. You can read and you can understand that what are the guidance of Islam in a particular matter, whether it is a banking, whether it is insurance, whether it is a stock market, whether it is a commodity market, whether it is a future forward market, derivative market, So all the issues, most of these issues are discussed in this book. So now we are looking at, features of Islamic finance. So as you will see later on that there are some, philosophy, and those philosophy, includes, if you want to make Islam financial system, so you have to take into account that there should be no interest, there should be no gharar, there should be no gambling. And then valid gain on investment is discussed, alternative financing is discussed, profit with risk, risk return is discussed, dealings in goods, not in money. This is another unique feature, transparency, additional risk. And then comes, debt versus equity, then comes business versus benevolence, then comes exchange rules, and finally, time value of money. So this is our outline for this presentation. Starting from introduction, interest-free versus Islamic banking. Usually we say Islamic banking. Why can't we say interest-free banking? This is another question. What comes to your mind? And when you say Islamic banking, so maybe some people who are, who have a problem with Islam, so they come closer to you. But if you say interest-free banking, so maybe more people come to you. So why don't you call it interest-free banking instead of Islamic banking? That it's not only riba, which differentiates between conventional and Islamic banking. If that is the case, maybe we can call it interest-free banking. But no, we take into account all teachings of Islam. And we try to make an organization according to Islamic principle. That's why we call it Islamic banking, not the interest-free banking only. In the 1980s, the term interest-free banking was used to describe an alternative system to the conventional interest-based system. But the term interest-free banking is a narrow concept denoting a number of banking instruments or operations which avoid interest. Islamic banking, a more general term, is expected not only to avoid interest transactions, but also to avoid gharar and also prohibited in the Islamic Sharia, and other unethical practices, and to participate in achieving the goals and objectives of an Islamic economy. Okay, so that is the reason we don't call it interest-free banking. We call it Islamic banking. So first thing is, riba is not allowed. The structure of Islamic finance revolves around the prohibition of any return derived on a loan, debt, riba, and the legality of profit. So while riba is not allowed, profit is allowed. You know, trade is allowed. If you consult Quran, Surah Al-Baqarah, so you will find this verse. I think I'm telling you a part of verse. Wa ahallallahu al-bay' wa harrama al-riba. What is meaning of this? Trade is allowed, riba is not allowed. Riba, commonly known as interest, is an increase taken as a premium from the debtor. It represents the return on transactions involving exchange of money for money, or an addition on account of delay in payment to the agreed price on sale, debts, or debts. As all transactions involving interest payments are strictly prohibited, debt contracts cannot be sold at a premium or discount. So if you have, for example, an account receivable of 100 dirham, and you want to sell me this asset, you say, okay, give me 95 dirham, and this is my 100 dirham account receivable. You can later on receive 100 from my debtor. This is not allowed. And exchange transactions of money or goods representing money like gold and silver must be equal for equal and hand to hand. You cannot sell 100 dirham to me for more than 100 dirham or for less than 100 dirham. And transaction must be equal for equal and hand to hand. Same time delivery, delivery of goods. You are exchanging two currencies, for example, dollar and dirham. So hand to hand. While the term equal for equal is obvious, meaning that any increase on one side would be riba, the exchange of money as business must also be hand to hand, because otherwise a person can take benefit by the use of money, currency, which he has received while he has not given its counter value from which the other party could take benefit. In the context of Islamic finance, a loan will be considered only a monetary or financial transaction where only funds exchange hands with a guarantee for repayment in full, without any return for the creditor. It will not be considered an investment. So loan is not an investment under Islamic financial system. Loan is, charity loan. Qarz Hasan. Investment in the Islamic context is not merely a financial or monetary transaction in which the transfer of funds is the only activity. Investment will be considered only if it becomes a part of real activity or is itself a real activity. So there is no concept of earning money on money. I give you 100, you will give me 105. No, this is not allowed. But this is allowed. I give you 100 and you are doing some business, some trade with my money. So whatever profit is coming to you, you share that profit with me. That is okay, perfectly fine. In case of any debts created by way of trade or ijara transaction, they are not allowed to charge anything over and above the principal of the debt. They are not allowed to charge costs of funds or rent on money in short, medium, or long-term loans, overdrafts, guarantees, financing against bills, receivables, or other instruments, or sell their debt instrument. So if you have given me, for example, your house on rent, and rent is say 2,000 dirham, and I cannot pay in time, for example, you cannot ask me for more than 2,000. You have all other options to recover money. Maybe you can cancel the contract, etc., etc. But you cannot ask me to pay more than 2,000 because you are not making payment in time. Islamic banks will not take or give any loan or enter into contracts seeking any increase over the principal of loans or debts created as a result of any credit transaction. Buying, selling goods, both on cash payment and credit for the purpose of earning profit is permissible. Pricing the goods, keeping in mind the time given for payment of the price in credit transactions, is also acceptable with the condition that it should not involve any addition or enhancement to the principal amount of the debt created as a result of the sale transaction. So while you are making sales, you can have two prices, one for cash sales, other for credit sales. So if someone is asking for cash, maybe you are willing to sell for 5,000, and if someone is asking for credit, maybe you will sell for 5,200. It's okay. But now this 5,200 is written in your contract, and your customer is required to make you payment after 6 months, and he is unable to pay in 6 months. You cannot ask him to pay more than 5,200. This implies that once any debt is created, the seller cannot demand more than the credit price stipulated in the sale or other contracts. In case of any debts created by way of trade or ijara transactions, they are not allowed to charge anything over and above the principal of the debt. They are not allowed to charge cost of funds or rent on money in short, medium, or long-term loans, overdrafts, guarantees, financing against bills, receivables, or other instruments, or sell their debt instruments. So one is riba. So riba is if you are giving me money and taking more money. If you are giving me money as a loan and getting more money, so that is riba. If you are giving me, for example, 10 kg of rice, and you will get back from me 11 kg of rice, again, this is riba. If you have given me money, which I am supposed to pay you after 30 days, but when I don't pay in 30 days, actually I pay in 60 days. So you are asking me to pay more for, making late payment. That is also riba. Okay, now the second we are going for Gharar is not allowed. So what is gharar? Can you tell me the meaning of gharar? So gharar is risk or uncertainty. Uncertainty is gharar. So what do you mean by uncertainty? Uncertainty can be you are doing a contract. For example, you are doing a sales contract and you are not sure about the price, how much price you have to pay. So it's a gharar. And you are not sure at how much about goods, how much goods I will get or what type of goods I will get. So we say this is a gharar, it's a risk. So if I give you one example from the business, say you have an orchard of dates, hadika and hadika al-tamar. Am I right? Hadika al-tamar. Can anyone tell me?
So like dates farm or what? Or
Huh?
what do you mean by حديقة التمر? It's like dates farm or what?
Yeah, dates farm. Very good. Very good. So for example, you have this date farm and you are saying me, doctor, look, I have a date farm and there are 100 trees in my farm. So I want to sell you this date farm for 20,000 dirham. I want to sell you my hadika al-tamar, yani not the hadika, the production of this hadika for 2021. So whatever dates will come to this hadika, you can take it. Give me 20,000 dirham and take all the dates of my hadika. Now there are no dates. We are doing this transaction in advance. For example, we are doing this transaction now. In these days, there are no dates, right? But I am telling you that, man, I don't know how much dates will come from your farm. And you are saying, doctor, look, last year it was, 40. Last year it was 1 ton and previous year it was 1.2 ton and this year it was half ton. And so average becomes this one. So on average, you have to pay, for example, 10 dirham for a kg or 8 dirham for a kg. And then you are telling me that, look, doctor, dates are selling in the market for 20 dirham per kg or 40 dirham per kg. So if you take this hadika, so you can expect that there will be so many half ton of dates will come. And at the rate of 40, you will be able to sell these dates for 60,000. But I'm just asking you 20,000. So give me 20,000. Take all the dates from my hadika after 6 months when it will 6 months or 1 year when it will be ready. So you can make a lot of money. So that's how we do business, yani. We make the deals in business. Islam says this is a haram transaction. This is a haram transaction. You can't do this transaction. You know why? Because you don't know how much dates are coming from your orchard. So it's a gharar. Okay, this thing is settled. Yani, does Islam says that you cannot sell, you cannot sell your production before it is complete? No, that is not the case. You need 20,000 dirham, I will give it to you. Let's make a deal. You will give me, for example, 200 kg dates. And those will be ajwa dates because in your farm you have ajwa dates. So let's do it. You will give me 200 kg dates ajwa after 6 months when they will get ready. But you can get price from me right now, no problem. I can give you. I can give you. You want to sell me agricultural goods, which are known, whose quantity is okay, whose features are okay, whose quantities are okay, and the goods which are generally available in the market. You are selling me dates. Even if there are no dates in your farm, you will be able to buy from the market and sell it to me. So these type of bay, yeah, we call it bay salam. You have a farm, you have an agricultural farm. So you are a farmer, you are farming the dates. So can you sell me the total production of your farm without diminishing a quantity? Answer is no. Can you sell me production of your farm by mentioning quantity? Answer is yes. If you want to sell me dates, you simply make a contract with me that after 6 months you will give me 200 kg dates. Take your money and go, no problem. But if you say, look, I have a orchard and usually 200 to 300 kg dates are coming in that orchard. So you just give me 20,000 dirham and take whatever is coming from you. No, this is not allowed because we don't know how much dates will come from your farm. Maybe they don't come. So now you can ask me that while you are agreeing on 200 kgs, so why don't you agree on the production? Actually, when I say 200 kgs, it means even if there are no dates in your farm, you will be able to buy from market and give it to me. The time which you are fixing for delivery, dates are available in the market because it's a season of dates. So even if you don't have the dates, your field is not giving the production, you can buy from the market and supply it to me. So uncertainty goes down. Let me tell you another interesting thing. If you make a contract with me that, doctor, I will give you 200 kg dates from my farm, again, this contract is not allowed. However, it can only be a preference that, doctor, I will give you 200 kgs from my farm, but if there are no dates from my farm, I will buy from market and give it to you. This is a correct contract. Yeah, the specifying production of a particular piece of land, ulama doesn't say that this is a good contract. They say you can always show preference that I will get from this piece of land if there is a production. If there is no production, I will accept from any other part, any other production, any taking from market and all. So that is the case with Bay Salam. Now we are coming to the question one of my daughters said that, doctor, look, there is a risk in every business. Yes. Actually, riba is risk-free. Riba is risk-free, In case of riba, you are making a contract. The next person is getting your money. You will get back 105. Whether that guy has a profit or loss. You have no risk, you will get 105 back because you made a contract. But see, Islam is clearly against the riba. So that means Islam is against this risk-free as well as, I should use the word now, high-risk transactions. High risk, which is Gharar. Gharar is a high-risk transaction. Uncertainty. Otherwise, low level or mild level risk is there in every business. And when Islam says, don't do this risk-free business, this riba, which is a risk-free. At the same time, Islam says on the other extreme, don't go into, speculations. Riba is not allowed, speculation is not allowed. So do the business in this window, in this normal window, low to moderate level of risk. Of course, every business has a risk. And in fact, when we say that riba is not allowed, actually we are saying that Islam promotes risk reward. So yes, there is a risk. Yeah, you will take risk as a businessman. And of course, risk reward comes with risk. Yeah, perfectly fine. High level of risk, which we call gharar, is not allowed. Very good question. You know, basically this salam sales were used in agricultural production from the time of the Prophet, peace be upon him. Now I was looking at Sharia standards and they have allowed for other things as well, but they have made certain conditions. I guess they have made a condition that goods should be, you know, specification should be okay. And then they said that the goods are commonly available in the market. So they have made certain conditions. If you read in detail the Sharia standard, which I gave you link, over there they have mentioned for other goods as well. But traditionally this salam was used in context of agriculture. There is another contract of advanced sales. We call it istisna. In case of manufacture, you are a manufacturer and you are making something for me. So as you said, my machine is broken and all those things. So we call it force majeure, yani things which are out of your control. You know, force majeure is something different. So if your machine is, for example, if I say, for example, you are a, you know, you are a, what we call it? What is Najjar? Najjar, you know what is Najjar?
Carpenter.
Carpenter. For example, you are a carpenter and I booked an order with you that prepare for me, you know, sofa prepare for me. I want sofa made by your hands. You are a very good person, you know, you are a technical person. You got sick, you got ill, you are not able to work. So I mean, will I say, oh, no, give me my sofa and all those things? This is a force majeure. Yeah, or as you said that I booked laptop with you, you are manufacturing laptop. And, you know, one day it happened that fire broken everything in your factory and factory machine broken and factory is, you know, factory is burned. So this is force majeure. These are the things which are out of your control. So force majeure is something different. So now I'm telling you that you can sell any product which you which is manufacturing, which involves, you know, istisna, sanaya, which involves sanaya, where you have to manufacture goods. You can also sell those goods before making those goods. So now I think I need to clarify you the complete picture. As a matter of fact, you cannot sell any item unless you are owner of that and goods exist. So this is the rule. But this rule doesn't apply to salam and istisna. So that is my simple point. Very simple point. Why not? Islamic bank can use this contract for anything. You are right. So basic rule is you cannot sell any item unless you are owner of that item and goods exist. And goods are in your possession. We will see later on rules of trades. Okay. Except salam and istisna, where you can sell goods which are not existing. which are not in your possession or which are not existing, you can sell those goods. Detail, inshallah, at the time of when we will study rules of trade. Well, this rules of trades we have not studied. We will study rules of trade, don't worry. Okay, Gharar is also involved. Okay, see, let me state again. Gharar refers to entering into a contract in absolute risk or uncertainty about the ultimate result of the contract and the nature and quality and specifications of the subject matter or the rights and obligations of the parties. Gharar is also involved if there is a lack of adequate value relevant information. Johal in Arabic we say johal, lack of information. Or other
ignorant.
Huh?
You mean ignorant?
Yes. Or there is inadequacy and inaccuracy of any vital information which leads to uncertainty and exploitation of any of the parties. Deceit, fraud, or deliberate withholding of value relevant information is tantamount to gharar. The current practices of financial institutions and insurance companies in the futures and options market are un-Islamic because of elements of gharar, interest, gambling, etc. The transactions of contemporary stock markets, if cleansed of these elements, would be Islamic. Yani if you take away, for example, gharar, if you take away riba, so you can, and there are some other rules as well. So if you follow those rules, as a matter of principle, stock market is a market where companies are traded. So trading on stock market is not haram. Basically, this is the point. But of course, with certain specific rules, and in Sharia standards, they have elaborated all those rules. The prohibition of gharar requires Islamic banks not to engage in speculative trade in shares, short selling, discounting of bills and securities, or trading in unidentified items. Similarly, Islamic investment bank involvement in IPOs of joint stock companies would require care to avoid gharar, as information asymmetry between the investors and promoters in the early stage of company's establishment may involve gharar. Trading in derivatives also involves gharar and therefore is a gray area for Islamic banks. Gambling is not allowed. All instruments like prize bonds or lotteries in which coupons or tabs are given and inducement or incentives are provided by an uncertain and unknown event depending on chance, or disproportionate prizes are distributed by drawing of lots, or where the participating persons intend to avail themselves of chance at prizes are repugnant to the injunctions of Islam. Disproportionate prizes are distributed by drawing of lots, or where the participating persons intend to avail themselves of chance at prizes are repugnant to the injunctions of Islam. Similarly, a scheme wherein the investor's money is safe and intact, but the prizes to be given are related to interest generated from capital accumulated through it, does not conform to the injunctions of Islam due to involvement of both riba and qimar. Gambling is involved in a number of financial transactions and conventional banks, schemes, products, which Islamic banks have to avoid. Conventional insurance is not Sharia compliant due to the involvement of both riba and miser. Government and public-private sector corporations mobilize resources on the basis of lotteries and draws, which come under the ban of gambling and are therefore prohibited. Okay. Okay. Gambling is not allowed. So these were some of the principles we discussed about, Islamic financial system. So gambling is not allowed, right? Miser and Qimar is not allowed. Gharar is not allowed. And riba is not allowed. Okay. So now we move to that how they work. What are their, system? Because usually you say that banks are there, they give you money and they charge you interest. So that's how they make money. They take money from you maybe at 2% and they give loan at 6%. So the difference is their profit. So if Islamic banks are not allowed to do these things, so how they make money out of that? So first thing is their business model is mudariba. And their business model is musharika. So can you tell me the difference between musharika and mudariba? Use mudariba and deposits. Now here is the question that why they use mudariba and deposits. The reason is this: I'm an account holder, you are a Ajman bank. I can trust you because your system is, everything is online. So even if you want to hide something, it is difficult for you to hide because the check and balance, the accounting system, the IT system of a banking company is so strong that even if you want to hide something, maybe you cannot. So that means whatever profit is coming, I can see how much profit you are making out of that. So I have a trust in you as an institution. But when it comes to from your side to me, I'm an individual. I do not have a strong, built-in accounting system and IT system and all those things. So as a banker, you think that maybe this guy is taking money, but he will not tell me the correct profit. Maybe at the end of the day, he come and say, oh, I have lost only, there is no profit. So mudariba is not popular when you give money to the public, when you finance to the public, but it is very popular when you take money from the public as a deposit. Hope I made my point clear. Any question? Mudaraba is you are my partner. If there is profit, you will share profit. If there is no profit, you will not get anything. If you look in Pakistani banks, if you look at some other banks, you will find this musharika and mudaraba very popular as far as deposits are concerned.